I'm not saying that real estate's going to zero, but to proceed like it's business as usual, like it's just another cycle, that is a very dangerous approach. In the short term, I think it'll be more of a melt-up situation, but there's going to come a point in that process where there's no marginal buyer for the bottom 75% of the stock. The Fed's not going to allow another real down cycle to occur. There's about 87 billion square feet of commercial property. 62% of that supply was built before 1990. How much of that supply is functionally and economically obsolete? 60% of the supply is owned privately. That's a huge problem. All markets, energy the last handful of years is increasing double digits. It's taking this single purpose, monolithic, appreciating asset and turning it into this financial machine positioned well for the 21st century. And last piece of the puzzle was cash flow piece. Bitcoin's CAGR could have been 200% a year.
Chris, good morning to you on the West Coast. Early afternoon for me. How are you?
I'm doing very well, Marty. How are you doing?
Doing well. Excited for this conversation. I mean, we've been talking about the intersection of real estate and Bitcoin for a few years now. Right before we hit record, you mentioned Leon Wonkum. We've had Andrew Hones on the show and a few others to talk about this. And recently we've had some real estate experts that really aren't focused on Bitcoin that have come on. So I think this is going to be a good continuation conversation. And you're someone in the real estate industry in California specifically that has decided to come out and sort of ring the alarm bells on August 20th. You sent out a tweet that's your pinned tweet, a warning and a call to action for the entire real estate industry. Real estate is at a breaking point. Monetary debasement, 62%, inventory obsolete, new financial products competing for capital. And so it seems like you're very well ingratiated in the real estate industry. You're a Bitcoiner, and you see the writing on the wall of some of the problems in the real estate industry, and you think Bitcoin is a potential solution to the problems that exist.
That's absolutely right. I've been kind of watching this from the sidelines, so to speak, having a career in the commercial real estate world and being a Bitcoiner on the side for almost a decade now. I joke, I tend to round up. I'm probably 7 or 8 years in or so, but just watching it and thinking through, what this means and the second and third kind of derivatives of the disruption that's going to take place here. And it's just gotten to a tipping point where I couldn't sit back anymore, and just had to speak up. Started to put some thoughts down on paper. I kind of been baking a strategy for a handful of years, and the last piece of the puzzle was the cash flow piece. So I've said to others that Bitcoin's CAGR could have been 200% a year. It didn't matter. There was a large segment of the real estate world that was just not going to, give it any attention because of that cash flow component. And there's obviously arguments for and against that. I get it. But when Saylor and Strategy started releasing these preferred offerings that provided that cash flow stream built on top of Bitcoin, that was when I was like, oh boy, here we go. Now we got to start talking about this because like it, hate it, whether you understand it or not, I mean, these are viable competitors to the real estate industry, not just the bond markets. So I just started talking about it, and here we are today.
And I think it's good that you're in the commercial real estate space because recently we had Melody Wright on talking about residential real estate, and I think it's important to draw a line between the two and really highlight the sort of differences of each. And we went pretty deep on residential real estate about a month ago. And so I think commercial real estate is a different beast, particularly in a post-COVID world where you had everybody rushing to work from home. And it seems like a lot of the commercial real estate properties were under stress during that era and still to this day. So I guess to take a step back and just talk about the problem before we jump into certain solutions. How bad is it out there?
Yeah, I mean, that's a good question. The commercial real estate sector in and of itself. I mean, it's vast. People tend to paint it with just a broad brush, but they overlook the fact of how many different property types and specialties make up the commercial space, and each of them have their own dynamics, their own supply demand dynamics that make it up. Deals get done very differently across each of these product types. So we could have a podcast, a long form discussion on literally each one of those specialties. But I mean, just at a high level, I mean, you obviously have Bitcoin, which is, it is disrupting the industry massively, and it's only going to pick up steam. But when you zoom out and you start to look at or consider all the other macro forces that are colliding at the same time, right? I mean, you cover a lot of them on your pod regularly, right? Demographics, technology, AI, automation, robotics, different generational expectations and consumer demands, a long-term debt cycle ending, a new monetary regime emerging. I mean, you stack all these major forces up, and then you turn around and look at the commercial real estate markets just in the United States. And in the United States, there's about 87 billion square feet of commercial property, just roughly. That's the four major food groups: office, industrial, retail, and multifamily. There's a handful of specialty sectors, but for the purpose of our conversation, let's just say it's 87 billion square feet. 62% of that supply, about 54 billion of it, was built before 1990, right? It's older than you and I are. So that was built in a completely different era, different consumer demands, different business models, all of it. So you hold that and then look back at these major forces that are underway, and you come to the conclusion very quickly of how much of that supply is functionally and economically obsolete. And you start to have an oh shit moment. Like how are we going to navigate this? And the next question you ask yourself is, well, who owns all of this stuff, right? And that's one of the big differences between residential and commercial, right? Who owns all this stuff? If you strip out all the you strip out all the public entities, the REITs, what have you, commercial real estate is owned about 60% privately. It's privately held throughout the United States. And that's not including the private REITs, the private institutional funds. If you included those, you're another handful of percentage points higher. So just knowing that 60% of the supply is owned privately, that's you, me, mom, dad, grandma, grandpa, small operators, business owners, family offices. It's Main Street. So that's a huge problem. And, kind of how you started the top of this discussion was, it's gotten to a point where we have to acknowledge it. We have to start having these frank discussions about what it means and how we're going to move forward. There's a lot of really smart people in the commercial space. And if we leverage our collective brain power, I have no doubt that we're going to make this transition a lot more seamless than it could be otherwise.
Yeah, and I think based off a tweet you sent out this morning, and I'll pull it up here just so people on the YouTube and Spotify video can see it. Correct me if I'm wrong, but it seems like there's an incentive misalignment between tenants and the owners of the building. You say here, office reset in motion, vacancy remains elevated, tenants are consolidating, decision cycles are longer, TI packages are bigger, renewals are shorter, well-located Class A with strong amenities is still moving, generic space is sitting, and pricing is adjusting. And so you have sort of the goals and the incentives of the people that own this property, which is, hey, we need to get tenants in and start cash flowing. And then you have the incentives of the tenants where they're thinking, okay, is this the best economic decision I can make for my business, my family, whatever it may be. And it looks like there's a bit of a incentive realignment, particularly on a duration scale, if that makes any sense.
Absolutely. And I mean, I've been kind of pounding the table, to the fact that this is not just another cycle, right? I mean, some of the biggest criticism or biggest feedback I'm getting from folks online is that, real estate's cyclical. We've been here before. It's just another down cycle, right? And okay, fair enough. I don't have 40 years experience in the business, but you're missing a big piece of the puzzle here, right? I mean, over on top of these cyclical changes, there's some structural changes that are taking place. The mismatch between landlords and tenants is just one of those that you're highlighting. So whether it's shorter lease terms, in commercial real estate, lease terms, majority of them are 3 to 5 years in length. You can get 7 and 10 years on, larger tenants, larger properties, but by and large, they're 3 to 5 years. And there's a lot of capital that is outlaid up front by both parties to get a deal done and to get the space ready. So when the tenant base is, saying we're not signing a 5-year lease because of X, Y, and Z, we need a 12, 24-month lease, that creates a whole host of issues for the landlord and the property and, even the tenant. So there's some big disconnects there that we haven't really filtered through yet.
Yeah, and I guess diving into the economics of the building owners and the owners of commercial real estate, where it's privately owned, or even the big funds, I guess distilling this down to sort of first principles, explain it like I'm 5, commercial real estate. What is their goal at the end of the day? What is their time frame? How much of a return are they typically looking to make? You can have timeline hold periods as short as 3 to 5 years. That's really the bulk of it. The last, 15, 20 years. That's how you're really making your returns and turning a profit, is those shorter compressed hold periods. You're not necessarily buying the properties for long-term holds and to cash flow them, because these things are only spitting off 4, 5, 6% in cash flow. So if you're going to, again, outpace inflation, outpace debasement, and, turn a profit, you're making it on the exit. So 3 to 5 years is the short period, the majority of the period, I should say. And there's some core assets, some core plus assets that are longer term holds, 10 years plus. But those are, you have a very different tenant profile. You have a very different end user in those properties. So 3 to 5 years, they're basically looking to get their nut on sprucing up the place and flipping it to somebody else.
Yeah, and exactly. And at the end of that hold period, you're looking maybe high teens on a return. I think that's kind of what you're looking for there on your question. High teens, low 20s are few and far between. If you get into the spec development world, you're mid 20s, but you're also taking a lot more risk. There's a lot more expertise and experience that's needed in those transactions. So yeah, high teens is what you're looking at. And again, that's where you come back to Bitcoin, as the hurdle rate. It's like, at what point do, these LPs, some of these less experienced operators, just see the light and say, hey, I'm going to allocate this capital to, other assets. Mm-hmm. I think this transition is going to be, there's some good things that are going to happen from this transition. I don't want to be a total doomer on it, because that's just not who I am. But I think the disruption is going to flush out a lot of malinvestment that we've had over the years. And it's also going to separate the pros from the amateurs, right? There are a lot of people running around pretending like they are, sophisticated real estate professionals. And now that the market conditions have changed, interest rates have gone up, materials and labor are up. I mean, they don't know how to navigate these markets. So the folks that don't have the edge, they don't have the expertise, they don't have a strategy, they're going to get flushed out. And those that remain, they're going to have a comprehensive strategy that they apply to every asset or across the portfolio if they're going to remain competitive and relevant and profitable. I mean, in my world, the big buzzword is we have a value add deal, right? And value add, when you strip away all the, the lipstick there, right? Value add just basically means we're buying a property, we're making some minimal cosmetic upgrades, we're pushing rents. Maybe we'll rename it, we'll rebrand the property, and then we're going to flip out of it for a multiple in a few years, right? We're not really adding any value to the property. And I think that game is coming to an end as well. So again, those that are remaining in the industry, they have to have an edge. They have to have some sort of strategy. And I'm not pretending like I have it all figured out, but I've, put a lot of thought into what that strategy looks like. And that's kind of what I've been talking about online is, these 4 pillars that real estate operators have to execute on if they're going to, be successful. And the first one is, I call it your Bitcoin strategy, but you can call it your capital strategy, whatever you want. And the Bitcoin strategy consists of a couple of things. One is what percentage of your US dollars are getting allocated into Bitcoin? That's question one. Question two is, I can also see a scenario where your US dollars are being held in a vehicle like Stretch, right? So you're being really intentional about how you're holding your capital. The second pillar or the second category in that Bitcoin strategy are your loans and financing mechanisms, right? And you've done a great job of talking about the dual-collateralized loans and these long-duration credit products that infuse Bitcoin. I'm really excited about that. I think that's going to be a natural onboarding transition mechanism for the industry at large. So I'm excited to see where that's going. And the third piece of this capital strategy is how you're raising equity. And that comes down to, understanding or at least acknowledging that your competition is just not your immediate submarket. It's not the building across the street, right? It's spot Bitcoin for one, and it's these adjacent products that companies like Strategy are putting out. Because again, like it, hate it, whatever your feelings are on them, there is a percentage of capital that's going to naturally migrate into these other assets as adoption grows, as awareness goes, as these financial advisors across the country get educated and incentivized to put them into the boomers portfolio. There's going to be a significant percentage of real estate owners that are going to say, hey, I don't need that apartment building anymore. Right? I don't need the tenants. I don't need the termites, all of that. And they're going to go for that, less management intensive vehicle. So that's one of the pillars. The other one is your energy consumption, right? I mean, depending in commercial property, energy is about 30% of your operating expenses. It'll fluctuate property to property, but that's a good benchmark is 30%. So, and in most markets, all property types, your energy the last handful of years, last 5-6 years, is increasing double digits, which far outpaces your fixed rent escalations. So if you're going to streamline operations, you're going to keep that NOI robust and durable, you have to optimize that energy consumption any which way you possibly can. And, most of the industry knows about, the basics, right? Window tints and films and sensors. There's all these IoT devices now that'll, reduce overall consumption, solar panels, battery storage. But now forward-looking real estate owners have to start thinking about Bitcoin mining, right? And how do you integrate that into the asset or across the portfolio? When you do it effectively, you're not only subsidizing, you're not only able to subsidize the energy cost, but you're taking an expense line and turning it into an income stream. When you do that on a large property or at scale across a portfolio, that's not an incremental improvement. That's a step function improvement in your operational efficiencies. And I need to kind of preface this by acknowledging that Bitcoin mining into these building systems is still very new. There's a lot of changes going on and a lot of innovation taking place. But at the same time, it's moving a lot faster than most people realize it is. And I mean, I'm also not an energy expert by any stretch, but as a real estate person, I see these three industries, these one separate industries colliding, right? You got real estate, you got energy, and now Bitcoin, tech, however you want to kind of put that last one together. But they're previously separate, now they're colliding. And when you apply it to this real estate asset, it's taking this single purpose, this single use, monolithic, depreciating asset and turning it into this financial machine that's resilient and positioned well for the 21st century. I mean, if that doesn't get you, out of bed every morning as a real estate operator, I don't know what does, right? So I'm really excited to see what happens in that particular area. The third category and the fourth category. The third category is tech integration, right? How are you integrating technology into the asset or across a portfolio? And technology helps you accomplish two things. One, it helps you provide a superior user experience, a superior customer experience, and it helps you streamline the operational efficiencies. We can have an entire podcast on the topic of prop tech. That's what it's called in my world. But again, it's allowing you to create conveniences and amenities for your tenants that they become very sticky. That's very, very important. The second piece of it on the operational side is you're able to get real-time data, make decisions faster, informed decisions at that faster, which ultimately keep your costs down and extend useful lives of building infrastructure. So that's very, very important. The fourth category, and I'll stop talking here, has to do with modular improvements, right? If renovations and tenant improvements over the last decade, they've increased 100% across all product types, across all markets. And again, if you're working on 3 to 5 year lease terms with these tenants and you're spending 5-6 figures every time a tenant moves out just to get ready for the next guy, that's terribly inefficient from a capital perspective. And then you look at it, this goes back to your earlier question too, whether you have a mismatch in incentives. The landlord foots the bill a lot of the time for those improvements. And oftentimes their break-even point's not until somewhere between month 20 and 25, generally speaking. If you have a big TI job, it can be well into the third year of the lease. So again, if you're turning over these units and dumping large chunks of capital into them every few years, in the world that we're going into, that is a very bad idea, and you have to figure out how to optimize that. And fortunately, today we have modular improvements that are getting a lot better. They're applicable here. And from the owner's standpoint, it allows you to appeal to a broader audience, right? More tenants at once. And then in addition to that, there's a residual value component that you can maintain through time and across multiple tenants. That's significant capital, significant dollars that fall straight to your bottom line. So again, just to kind of put a bow on all this, if you're going to be a real estate operator, through the end of this decade and into the 2030s, that old value add strategy, letting appreciation do its thing, that's gone. Don't do that. Don't give your money to that investor. That's a bad idea. They have to have a comprehensive strategy that they're going to execute on the asset or across a broader portfolio. Full stop.
What's up, freaks? This rip is brought to you by good friends at Silent. Silent creates everyday Faraday gear that protects your hardware. We're in Bitcoin. We have a lot of hardware that we need to secure your wallet amidst signals that can leave you vulnerable. You want to pick up silence gear, put your hardware in that. I have a tap signer right here. I got the silent card holder, replaced my wallet. I was using Ridge Wallet because it's secured against RFID signal jacking. Silent, the card holder does the same thing. It's much sleeker, fits in my pocket much easier. I also have the Faraday phone sleeve, which you can put a hardware wallet in. We're actually using it for our keys at the house too. There's been a lot of robberies. They have essential Faraday slings, Faraday backpacks. It's a Bitcoin company. They're running on a Bitcoin standard. They have a Bitcoin treasury. They accept Bitcoin via Strike. So go to slnt.com/TFTC to get 15% off anything, or simply just use the code TFTC when shopping at slnt.com. Patented technology, special operations approved. It has free shipping as well. So go check it out.
Sup, freaks? This rip of TFTC was brought to you by our good friends at Bitkey. Bitkey makes Bitcoin easy to use and hard to lose. It is a hardware wallet that natively embeds into a 2 or 3 multi-sig. You have one key on the hardware wallet, one key on your mobile device, and Block stores a key in the cloud for you. This is an incredible hardware device for your friends and family, or maybe yourself, who have Bitcoin on exchanges and have for a long time, but haven't taken the step to self-custody because they're worried about the complications of setting up a private public key pair, securing that seed phrase, setting up a PIN, setting up a passphrase. Again, Bitkey makes it easy to use, hard to lose. It's the easiest 0 to 1 step, your first step to self-custody. If you have friends and family on the exchanges who haven't moved it off, tell them to pick up a Bitkey. Go to bitkey.world, use the key TFTC20 at checkout for 20% off your order. That's bitkey.world, code TFTC20.
That was a fire hose of information. I've been here taking notes, and it makes a ton of sense. I think this intersection where you say like energy, real estate, Bitcoin, whatever you want to call it, tech, is certainly happening. And I think capital efficiency is the name of the game as we get into this sort of debasement trade reality. And obviously, I think Bitcoin is going to be a crucial part of anybody's tool set, not only in real estate, but like bringing this back to the top of that fire hose, going back to the question of where are you holding your capital. You said that MicroStrategy Stretch, the preferred offerings with yield are very appealing, but just to paint like a full picture for people, what is the typical sort of practice of real estate investors or property owners, what they do with their cash flow and the cash in their bank account? Are they just buying treasuries? Are they going into money market funds? What are they doing?
Yeah, I mean, it's all the above, right? Checking accounts, T-bills, money market funds, just short duration vehicles that are, perceived as safe and, throw off a little bit of yield. But again, maybe this is the Bitcoiner in me. I'm, looking at these products, and you just kind of look at some of the highlights, right? Senior in the capital stack, over collateralized by 5 or 6 times, right? Liquidity, right? All of these things. I personally would put my trust in, the management team over at Strategy that I would, the clowns in Washington, because we all know where that goes. We all know what happens there. We've seen that movie.
Yeah. And going back to like incentive misalignment, I think it's top of everybody's mind. Maybe not everybody's, but it's a big theme right now. The relative unaffordability of real estate. And when we're talking about like incentives of the owner specifically, whether it's an individual or a fund, they need the value of the asset, the real estate asset, to go up to sort of make their nuts. And so they're highly incentivized to push the price up. And bringing this back to what you mentioned about these dual collateralized structures, that's why we're supporting battery finance at 1031, and why we're very bullish on the strategy overall, not just for them specifically, but people that are tenants of commercial real estate properties or residential real estate properties, because you sort of give the owners of these properties a reprieve in the sense that they don't need the equity value of the property to go up a certain percentage every 3 to 5 years. If it's dual collateralized, they can let Bitcoin do some of the work of equity value accretion.
Absolutely. I think it comes just to distilling that down for the average real estate person is you have to explain to them that this is a new tool a new innovation that's complementing the real estate asset, right? If your livelihood and your business is, in and around real estate, that's fantastic, good, right? I'm not saying sell all of it and, run to the hills, learn how to homestead. That's not what we're talking about here, right? You have a new tool that improves the asset that you know inside and out, right? Why would you not learn it? Why would you not figure out how to integrate it into the operations, into the asset? Plain and simple.
Yeah, and it's not only, I think the benefit of adding Bitcoin to the collateral package is twofold, maybe more than twofold, but I can think of two very good reasons off the top of my head. Obviously, Bitcoin's CAGR, again, it can help you increase the equity value of that collateral package quicker, arguably, than you would if you're just depending on real estate alone. But then liquidity, which you mentioned too. I think the liquidity component is very underappreciated. The ability,
Absolutely.
if God forbid something goes wrong, to get part of your principal back immediately.
Yeah, absolutely. I mean, it's whether it's the loan piece or the treasury piece that we're talking about. When I'm talking with real estate owners about this topic, bringing the conversation to where they're at, right? Meeting them where they're at, right? Why should you hold Bitcoin on your balance sheet? Well, you can improve your purchasing power. You can build and maintain adequate reserves for CapEx and maintenance and emergencies, right? And then you're going to improve your credit worthiness over time, right? That's something that the real estate owners get, right? They can get on board with that. And that's just the treasury component, right? Now you add in this, the loan component, and the conversation just continues from there.
Well, on that note, since you've gone public, and I'm sure you've been talking to many other people outside of your audience on X, how has this pitch been received by people in your industry?
It's been mixed. It's been very mixed. That said, I have been pleasantly surprised at the feedback. There's a lot more curiosity and receptiveness than I initially expected, which is positive. I mean, I've had people reach out from across the country in all different areas of the industry, right? Brokers, lenders, fund managers, contractors, and the conversation with those guys goes one of two ways. The first one is, "Oh my God, thank you for saying this. I thought I was the only one," which that's an easy conversation. And the second piece is, "This is really interesting. I see where you're going. Tell me more." Right? Those are the positive feedbacks. The negative feedback, I mean, again, I mentioned earlier, this is a cyclical business. We've been here before. If you're into Bitcoin, why don't you just go buy Bitcoin? Just dismissing it, right? So that tells me that that education gap is still very, very, very wide, and we have to do everything we can to narrow that gap.
Well, on that last point, that's the most common negative feedback that I get is, all right, why don't we just use the cash to buy Bitcoin? Why do we need to dual collateralize it? Why does the real estate company need to hold it on the balance sheet themselves? And again, what you said earlier, like a lot of hardcore Bitcoiners, like, sell all your real estate, like, get out of it, just buy Bitcoin. But it's like, no, we actually need businesses and properties that these businesses actually operate in to provide goods and service to the economy. So there's got to be some sort of middle ground or bridge that sort of connects these two worlds. You can't just throw the baby out with the bathwater. You can't just, everybody dumps all their assets, buys Bitcoin, and thinks the world's going to be fine. It's not how this stuff works.
Exactly. And I say very, very frequently, right? I'm not saying that real estate's going to zero, right? Far, far from it, right? It plays a vital role, like you're alluding to, in human society, right? Shelter, business, community, culturally. I mean, pick one. But to proceed like it's business as usual, like it's just another cycle and, things are going to work themselves out, that is a very, very, very dangerous approach. And to think that, because you bought properties in the last cycle for 4, 5, 6 caps, and when the cycle comes full circle, you're going to be able to exit that property at similar cap rates and go about your business. I think that's incredibly nearsighted. I also think if you think that you're, again, going back to that inventory issue we have, right, of 62% of it being built before 1990, if you think those properties are all going to trade at a premium with the trophy assets and the Class A properties, again, I think you're incredibly nearsighted. You're not looking at the entire game board objectively.
Sup, freaks? This was brought to you by our good friends at Obscura. If you've been listening to the show long enough, you know we care deeply about privacy, particularly as you peruse the web. It is important to be using a VPN, and Obscura is our VPN of choice. That is because it is a VPN built by a Bitcoiner for Bitcoiners. It is the first VPN that can't log your activity and outsmarts internet censorship. Obscura VPN works even in the most restrictive Wi-Fi networks where other VPNs simply fail to connect. With server locations across America and the globe, Obscura keeps your internet access unrestricted wherever you are. I've been using it since it launched. I see no problems with speed. I can get on YouTube TV without any problems. It simply works. They can't log. You can pay in Bitcoin. Go to obscura.net. Use the code TFTC25 for 25% off an annual subscription. It's already a good deal, their annual deal. The TFTC25 code gets you 25% more off. Go check it out. Obscura.net. Use the code TFTC25. Sup, freaks? This was brought to you by our good friends at Unchained, and they are holding another live event that you should check out. Markets are choppy, layoffs are in the headlines, and rate cuts aren't fixing the core problem. That core problem is that the fiat retirement system is taking on water. On October 28th, Mark Moss and Unchained's Jeff Vandrew will explain why 401ks were built to serve the system, not you, and how fees and hidden risk create an illusion of wealth. You'll learn why Bitcoin's security and growth curve make it a powerful long-term savings asset, and how a Bitcoin IRA can let you roll over an old 401k with tax advantages intact. If you want a retirement plan that prioritizes sovereignty and purchasing power, this is the event. Register now at unchained.com/TFTC. Unchained.com/TFTC. Well, on that point of the sort of dated inventory, what do you think happens with that or needs to happen? Does a lot of it get demolished? Does a lot of it need to be bought and completely gutted and renovated, or what's the solution there?
Yeah, that's a tough question because it varies so much by market and property type. But generally speaking, I would say, yeah, there's a lot of just small parcels, small properties, very, whether they're funky shapes or inefficient layouts, they largely need to get demoed. They need to be redeveloped. If someone would come in and assemble, multiple parcels to, get some scale and build something new. That's how I see that going down. But that's going to, if you don't get some of the local municipalities on board, right? I mean, you're just stuck in, a regulatory quagmire for years. And I mean, that's one of the things that disincentivizes a lot of that activity from taking place. I mean, especially since COVID, there's a fair amount of redevelopment and demolition going on across the country, but not nearly as much as it should be. And I always come back to, the regulatory burdens that are there. I mean, the time and the cost that it takes to get through zoning and planning in any one of these municipalities, whether the state is red or blue, it'll boggle your mind, right? And along that entire way, you have to have a team of people that are ushering it through the process, right? There is so much education, there's so much Q&A that takes place with the planners. So it's not just set it and forget it, fill out an application and wait for the decision. I mean, it's very, very proactive. To get through some of these city governments.
Yeah, I forgot to mention my OG intersection of Bitcoin and real estate guest, Kelly Lannon, but we spent a whole episode many years ago, probably 3 years ago now at this point, just on the zoning and planning requirements. And it seems like that's something that needs to be completely razed to the ground and rethought. Yeah.
When just in my day-to-day business, in commercial real estate, you always have to know what the underlying zoning is for a property, right? Because that essentially dictates what can and cannot go in a particular location. So I'm a lot more familiar with the city zoning than I ever thought I would be. And where I'm at in Southern California, I mean, I play in, probably a dozen different cities. These zoning codes are 500 pages, each city. And there's, footnotes here and nuances there and asterisks there. I mean, you've got to have an AI just for that particular city to get through the zoning code. And at the end of the day, the guy just wants to know if he can do manufacturing at the location. So that's a whole nother topic in and of itself, as well. But I mean, I think about online, I've been using the word devaluation, right? I've been using devaluation a lot, and I will admit I'm trying to get a little bit of a shock and awe factor, right? Get your attention to some extent. I think about devaluation versus the melt up scenario. Right. And in the short term, I think it'll be more of a melt up situation. But there's going to come a point in that process where there's no marginal buyer for, the bottom 75% of the stock. Right. And I think we saw the very beginning of this, in the 21, 22 cycle. There were 50, 60-year-old properties trading at figures that were just absolutely bonkers. So if and when you see that melt up process occur again, where's that ceiling? And, when you hit that ceiling, it'll take time for the sellers to adjust their expectations, and, values will fall during that time. How long does it take? I don't know. Real estate moves a lot slower than, global markets or anything in our digital world. But my fear there is, by the time that a lot of those legacy owners realize what's going on there, the train's going to have left the station. And at that point, what is the value of the property? You have land value. You can kind of look at it as a little bit of a built-in stop loss if you have value in the underlying dirt. But again, on a lot of these older assets, these older properties, they're small parcels. Unless you can assemble multiple and get some scale, there's not a whole lot of residual value there.
Yeah, I'm being reminded of sort of the shock and awe devaluation headlines I've seen. Denver had a couple buildings go for a few $1 million, and they were sold for 9 figures not too long ago. I believe Baltimore, DC area, similar things, even in Manhattan. Some of these properties are being sold at an 80% discount to their last purchase price. Like, it seems like there definitely are pockets of the market where this devaluation is starting to happen.
Absolutely. There's been some incredible data points hit the headlines. You're alluding to a lot of them. We've had a handful of them in my market here in Southern California. Again, I think that's good. Get those bases to reset. If you're an active participant in the real estate world, and you should be buying, the only properties you should be buying now are, you need to buy them out of bankruptcy, right? Courthouse steps, pennies on the dollar, get that basis as low as you possibly can, or buy it significantly below replacement costs, right? If you can do that, then I think you have a path forward, over the next 5-10 years. But that's also the first filter, right? Once you buy the property, if you can get a great location, great asset, attractive basis, from there, you need to implement, a strategy similar to what I laid out earlier, right? Because if you don't do those things, you're not proactive about the operations. I don't care how great the property looks on paper, you will struggle to compete in the years ahead. So that's how I kind of see it is, if you insist on, buying real estate now, make sure you're looking in some of those areas.
Well, that begs the question, like, how many buyers are in a position to actually do that versus those that are fully allocated and sort of stuck with the portfolio that they've already built.
I'm actually really glad you said that. And before I go into that, what you just described, right? How many people can actually do that, right? That goes back to one of my earlier points, right? We're going to separate the pros from the wannabes, right? If you're buying a property off Zillow, off LoopNet, whatever, mass marketed, that one's going to struggle, right? And I'm saying this, to my own detriment. I mean, I'm a broker. I do leasing and sales of office and industrial properties, but you need to have the foresight and the understanding of how to buy these assets below their fair market value, right? So that's my 2 cents on that. But as far as these operators that have existing portfolios, they have existing obligations, that's a tough sell. There's some operators, some big time capital that's coming into these major markets, gateway markets, large metros, mine being one of them here in Southern California, where they don't have any of those existing obligations to worry about. They got a couple $2 billion in cash and they're ready to deploy it. And, if you find yourself in that situation, then that's a really, really incredibly strong place to be in. And I definitely think you have a path forward there. Absolutely.
Mm-hmm. One thing you said earlier.
Have discipline in what you're buying. Have to have discipline in what you're buying.
Yeah. And bringing this back to sort of intersection of Bitcoin in the market that you play in, one thing that you said earlier that was encouraging is that you've had a bunch of people reach out from different parts of the industry, from brokers to buyers, sellers, contractors, development companies. And that's encouraging because if each of these individuals or individual entities in these different part of the markets begin incorporating Bitcoin, it sort of de-risks them all at the same time, in my mind. If they each get Bitcoin on the balance sheet or incorporate it into their part of the industry in the way that's best suited for them, you can see like a collective strength building up where it's easier to do deals and people don't feel like they're taking on too much risk because they have this safety net, for lack of a better term, in their Bitcoin exposure.
Absolutely. I mean, you can draw those same comparisons in the lending space, right? With what Battery's doing, and those that have the dual collateralized loans, they're going to fare a lot better than those that don't. And when those properties that don't have that Bitcoin exposure go bust, that's going to be the Batteries of the world are going to be the players that can swoop in and get properties at good basis. Same thing with the development community. I mean, there's going to be, for the developers that have a war chest of Bitcoin, there's going to be some incredible opportunities for them over the next handful of years to acquire market share. Absolutely. And it's kind of, I was thinking through, I've been thinking through this one a little bit. You have the Bitcoin cycle, right? I mean, obviously some people are, arguing that 4-year cycle's over with, but whatever your opinions are there, you have a Bitcoin cycle and you have a real estate cycle, right? And over this arc of time, they're colliding, right? So I almost see you in the point of the cycle where you're in your Bitcoin accumulation phase and your education phase, right? So accumulate as much Bitcoin as you possibly can and educate yourself on what these various components of a strategy can be, right? And as you're doing that, you need to have an assessment of your holdings, right? Figure out which assets are core and which ones aren't. The ones that aren't, sell them. Get rid of them. Doesn't matter if you take a discount on them or not. Get them off your books. Get that liquidity, right? And I see this kind of period of cycle going from today to maybe 2030, 2032 on the long end. And then from there, you start deploying your war chest. You start implementing the strategy. Hopefully you've acquired some stuff that, between now and then. And you have, a handful of doors. You have a handful of buildings to go execute the strategy on. That's not a fully baked idea, but you just you got my wheels turning there as you made some of those comments. But I'm kind of seeing those things collide again.
Yeah, and well, you were talking earlier on the subject of prop tech, make tenants sticky, get you better data. I don't think this applies to those 2 points that you made, but you look at something like Square did last week with the integration of Bitcoin in their point of sale systems. And like if you're a property developer, particularly for commercial real estate that's catering to retail businesses, it's like, maybe you lightly nudge the tenants to use Square terminals and educate them about Bitcoin to sweep a portion of their cash flows into Bitcoin using the Square terminal, because that sort of de-risk the tenant risk for you.
Well, play that out. I love where you're going with this. Play that out one more step, right? In commercial real estate, a large part of the value, right, that people pay, the multiples people pay, are based on the tenant, right? It's not 100% on the property itself. It's on the quality of the cash flow, right? So in our world, we talk about credit tenants, right? If you got a bunch of credit tenants, that property is going to go for a premium relative to a property that doesn't. And as if you have this retail center, this strip center where you can lightly nudge or incentivize your tenants to learn and accept Bitcoin, how does that property trade in the marketplace when you go to sell it? If you have a retail center that's got, however many tenants it is, but those tenants hold Bitcoin on their balance sheet, and you have the exact same property where those tenants don't, how does the market assign a risk to those two properties? How do they assign a premium? That one's going to be really fun to watch play out. So stay tuned on that. You'll have to have me back for when that actually happens, and I'll bring all the data points and analysis for you.
Yeah, because I think it's very underappreciated what they launched last week. 4 million small, medium, some large-sized businesses across the country with the ability to do this automatically as of last week. Who knows what the uptick on adoption of that particular feature within the point-of-sale system will look like, but you can imagine a world where slowly but surely it starts at 5%, grows to 10%, and maybe 50% of Square merchants are sweeping at least 10% of their revenues into Bitcoin. And it's going to be incredible the amount of data that many people have 4 years from now to make decisions off of. And
absolutely,
I think the one thing I wanted to say earlier, or a question I wanted to bring up, is, and this is something I've been beating the drum about, particularly in relation to this Square launch, is a bunch of people, particularly in finance and in real estate and other markets, are sort of pointing at the Treasury, the Fed, the Trump administration, saying, don't worry, they're not going to let things go to shit. And I think that sort of consensus view on how we're going to, quote unquote, fix the problem is short-sighted, and people need to adopt sort of creative, bold solutions that are sort of external and inoculated from the whims of the political class.
I agree with you 100%. I think it's incredibly short-sighted. I think the market, the players in the market have all been, conditioned for at least the last 15 years to believe that the Fed's not going to allow another a real down cycle to occur, right? I mean, the Fed put comment has, it's everywhere. And again, I think that's incredibly dangerous. I think it's nearsighted. But when you play this out, let's just say that they do jump in, right? They jump in, they backstop it, no problem, right? We're business as usual. One, we've seen the inflationary impacts of that, but I'll leave that on the side for now. But if they do that, their only tool is interest rates, right? I mean, interest rates aren't reversing demographics. They're not reversing AI and automation, robotics, right, from reshaping business models and broader society. They can't change the mobility of labor. They're not going to change the rise of Bitcoin as a store value. right? So all of those things are outside of the Fed's control. There's structural changes taking place in the market. And this goes back to, what I said earlier is this is not just another cycle, right? There are structural changes taking place, which is why you can't assume that this is business as usual.
Oh. With that in mind, I mean, you've given a rough playbook, but for anybody listening who's in commercial real estate, what is the lowest hanging fruit? What is the first step? What is the game plan to begin thinking about this? Because we've been going for 50 minutes, and I'm sure for a lot of people it's overwhelming. But from your experience, what would you advise in terms of, all right, you are curious about this, you think it may be a good idea, what do I do first? What do I do next?
Yeah, I mean, the first step is just, putting your ego aside and getting educated, right? I mean, I imagine that a lot of people, listening to your channel are already there. But, for the real estate professionals that maybe aren't, start getting familiar with Bitcoin, start the learning and the education journey. And as you get that, the first step is to buy some Bitcoin, allocate some of your US dollars to Bitcoin, hold it in self-custody, experience what that is like, right? I mean, you should have the butterflies in your stomach when you export or send your sats from the exchange to your wallet that first time, and they don't show up instantaneously, right? I mean, you should be having an oh shit moment. Did I do something wrong? Is it gone forever? Have that experience, go through the process, and start slowly accumulating a Bitcoin position. Once you get there, now all those other avenues that we covered here today, start to are on the table. And you don't have to do it all in one afternoon either, right? I mean, this, like I said at the top of the hour, I mean, I've been baking, this everything I've said here, I've been baking for half a dozen years.
Yeah. Well, on the other side of that coin, what would you like to see in terms of products, services from the Bitcoin industry would make this roadmap easier to go and tackle?
Oh, good question. I mean, obviously the point of sales for certain tenants is a big one, but in the commercial world, I think the lending area is probably the lowest hanging fruit. Since I've been talking about all of this, the number of questions and inquiries I've gotten from people across the country, different products or different property types, different sizes. Where can I get one of these Bitcoin credit structures? Where can I get this dual collateralized loan? Right. And currently, you can't, it's only reserved for a certain segment of the market, right? You have to have a certain size of the property. So I think there is a lot of opportunity in the middle and lower middle market to provide some of these lending solutions.
Yeah. And that's just having been on the front lines of that. I think the big nut to crack there is to get institutional capital to take the plunge to actually deploy into these strategies, which is definitely beginning to happen, not in earnest, but it's one thing that blows my mind. Not even thinking about the dual collateralized, just simple Bitcoin collateralized loans for US dollars. If you look at the rates across the board for the companies that are doing it, right, not using DeFi, putting it multi-sig, not rehypothecating, the fact that it's double digits or just below double digits is insane to me when you consider the risk profile, considering the collateral sits in a wallet that can be liquidated 24/7, 365. And if you're putting dollars at risk, the risk that you actually lose your principal is extremely low.
I'm surprised that the rates haven't come down faster as well. That was one I got wrong. I thought the rates would come down and you'd see a lot more of it sooner than we have. I mean, a positive thing, high signal, as you say. The fact that Battery's deal in Philly there, they got awarded the CoStar multifamily deal of the year or developer deal of the year in that market. And CoStar, if you're not familiar, they're like the primary data source, database for commercial real estate. Anybody in commercial real estate has a subscription to CoStar. So they're the monopoly, and for an incumbent like CoStar to issue that award and draw attention to that deal, that was very positive. And I've shared that with a lot of different folks in my world, and they all do a double take. They did what? And then they got awarded what? So it's opening up a lot of the conversations. People are saying, okay, these things have, various, like what various utility to what we're talking about here. That's been helpful.
Yeah. And I guess second to last question. Let's paint the optimistic future for commercial real estate. If this is all implemented, let's pretend like people listen to this and they go, oh my gosh, Chris, you're right. Let's begin implementing this immediately. That happens. What does the world of commercial real estate, and not only of commercial real estate, but beyond, what do communities look like? What does the economy look like if this is fully integrated?
Yeah, great question. We're going to have another hour for that one. But you have a much healthier and robust asset class, right? Real estate is the largest asset class in the world. It's ripe for disruption. Adopting and integrating Bitcoin into it, and some of these other strategies, makes it resilient, right? And again, it's going to improve your communities. It's going to improve your business. It's going to improve all of your the everything that comes with your life and lifestyle. I find it as much as Wall Street gets all the headlines and clicks and whatnot, Bitcoin started as a grassroots movement, and it's obviously continuing that way, but with the merchants, the retail merchants adopting it, the investors using these long duration credit products, it's going to be a grassroots movement that continues and saves the real estate world. That to me is how it plays out. That's how it plays out. And I mean, I went through college and entered the workforce when the Great Recession was going down and concluding, right? And when the dust settled on all of that, the movies were made, the books were written. I mean, it was very clear that there was a lot of people that knew exactly what was going on, and they were doing some very questionable things. They weren't acting in the best interest of their clients, right? They weren't being good fiduciaries. And I don't want to see the same thing happen here in real estate. And when the dust settles on this and the movies are made, the books are written for this transition and this potential crisis, I don't want my name or any of my colleagues attached to that they were selling buildings, in the name of a commission. They put a business into a bad lease for a quick fee, right? I don't want my name or my firm attached to any of that. So if I can go down as, the crazy Bitcoin guy that tried to warn everybody, I can sleep good at night with that. And I'm cool with that. So I don't know if I totally answered your question there, but that's kind of how I see it.
Yeah. Well, we need more people like you in the world, Chris, because I think there's certainly some froth in terms of the questionable nature of some of the actions going on in the market right now. But you got to be optimistic, never doom. We have a roadmap for how to begin to fix this problem, and I think that's maybe another thing to touch on before we wrap up. I think setting expectations, and my impression is that this is not going to be a quick fix. This is something that's going to take time to integrate, and you just have to commit to a 10-year view and start walking.
I think that's exactly right. But 10 years minimum. Again, real estate it moves at a glacial pace, right? Compared to markets and just everything in our digital world. So you're not behind, you're not late. This is a perfect time to get started and start figuring out what the best path path forward is, right? I mean, if you're wherever you are in the industry, right? Brokers, capital markets, property management, contractors, architects. I mean, it's crazy how many different industries real estate touches and affects, right? So wherever you are in that industry, I challenge you to be the first one in your firm or the first one in your area to start talking about this. Get your team, get your partners talking about it. Be the first mover to adopt a Bitcoin standard, get it on your balance sheet, and start harnessing its power. And that goes for every industry, for that matter. Actually, insurance, medical, pick one.
Yeah,
that's what we need to do as Bitcoiners. We need to spread it out to all these different industries that power our economy.
Yeah, and again, I'll reiterate it. It's the solution that will enable you not to have to point to the Fed and the Treasury and say, don't worry, they're going to fix it. It's like you don't need to wait for them to manipulate interest rates or do a massive bond issuance, inject stimulus into the economy. You can begin to fix your own balance sheet. And collectively, if enough people do that, we can look up and say, hey, we actually didn't need their help. We could do this ourselves, which is incredibly empowering and hopefully exciting for many people, because I think a lot of the market, not just real estate, just the American economy, is almost held hostage to the whims of the Fed and the Treasury more and more these days.
Yeah, and I mean, as much grief as social media gets, and the various negative side effects of social media, there's been some positive things, and that's flat out getting the education, getting the knowledge, getting the other side of the story out there, and letting people make their own decisions, right? I mean, I feel like people talking about macroeconomics these days, and now they're dropping the buzzword debasement trade. I mean, these are from people that they've that never before are they interested in these topics or exploring these particular areas. So again, I think that's the positive side of decentralized communications and media is how many people were able to access, and telling them the other side of the why you may not need a Federal Reserve is part of that.
Yeah, there's a lot of noise out there, but there's also a ton of signal. You just need to know how to find it, and hopefully now you found Chris, and you can continue to follow him on his journey to implement Bitcoin into the commercial real estate market. So Chris, really love this conversation. We'll have to do it again at some point, maybe at the beginning, first quarter of next year. And where can anybody who is so curious find out more about what you're up to, get access to the content you've been making?
Yeah, thanks for having me. By the way, this was awesome, and look forward to keeping you and your listeners up to speed on the commercial real estate markets. You can find me on Twitter. I do have a Nostr account, but I'm still trying to figure it out. There's a little bit of a learning curve. I haven't gotten over on that one, but Twitter's the primary. I post the videos on YouTube as well, but Twitter's the main source. And once you get to my Twitter, you can find all my other channels, what have you.
We will link to that in the show notes. I hope you have an incredible Tuesday on the West Coast, Chris. And yeah, we'll do this again at some point next year.
Sounds good, Marty. Thanks again for having me. This was awesome.
Peace and love, freaks.
Okay. Thank you for listening to this episode of TFTC. If you've made it this far, I imagine you got some value out of the episode. If so, please share it far and wide with your friends and family. We're looking to get the word out there. Also, wherever you're listening, whether that's YouTube, Apple, Spotify, make sure you like and subscribe to the show. And if you can leave a rating on the podcasting platforms, that goes a long way. Last but not least, if you want to get these episodes a day early and ad-free, make sure you download the Fountain podcasting app. You can go to fountain.fm to find that. $5 a month gets you every episode a day early, ad-free. Helps the show, gives you incredible value.
So please consider subscribing via Fountain as well. Thank you for your time. And until next time.
Okay.